Hey guys, this is Claudia here from the Bookkeeping Experts. I told you I would be back, and here I am, back for one more week of education. And today we're going to talk about something very important. That's the continuation of the cleanup. So, a lot of people have been asking, Claudia, when are you coming up with the next one? Here it is. Here it is. Part 2 of how to clean up your books for business owners. Like I said, there will be one for accountants and bookkeepers, but this one is for business owners. Accountants and bookkeepers have different tools that they can use to clean up. But for business owners, this is how we do it. And we're going to go over on step by step on how to enter cash transactions today, how to enter assets and liabilities, and how to look at the profit and loss and balance sheet and do a final checkout, see if there's anything miscategorized and fix that before you close the books. Okay, so and then finally we'll close the books. So it's all done, ready to go. You send it to your CPA, and then you want to close the books. Why is that? Because once that file once your taxes are filed, you want to lock that so nobody else can make changes to it, right? So if you have to refer back, everything is good according to what was filed. All right, now first I wanted to point out the importance of stay up to date with your books. A lot of people think, oh yes, end of the year, gotta get it ready so that I can file my taxes. Yes, that is very important. And by the way, we are in November, so just a little bit of time until maybe you can do a few adjustments so you know how much money you're going to be liable for taxes. So maybe there's a few things you can still do. Maybe purchase some equipment that you need to offset the tax liability, or any tax strategy that is still within your time frame. So, open an IRA or put more money into the college fund for your kids, which is tax free. So there's a lot of things you can still do before the end of the year, but you need to know what's your liability. If you don't know what's your liability, you don't know where your business is, you won't be able to do that. So that's why it's important to stay up to date. And it's important to stay up to date and verify every quarter to see where you're going. And are you meeting those targets? Are you, setting up, first of all, are you setting up goals? You got to set up goals. Be able to know exactly where you are. So you need to know how your finances are doing. And then you got to set goals. And then you got to stay up to date on how you're doing compared to what your goals are. So that's how you take your business to the next level. That's how you grow. What do I need to make adjustments so that I can grow? A lot of small business are having a hard time with the cost of labor, which has increased by a lot, and also the cost for restaurants. Your cost of goods, the food has skyrocketed. So you want to keep track of your costs. And even for other retail stores that sell products that with the current inflation, the products have gone up so much. Shipping has gone up so much. So you need to keep track of that, and so that you can know what to do and what kind of strategies you can set up to offset some of those costs or increase sales. All right, so enough of that. Enough of that. We all know how important it is. We've talked about that before. So yeah, stay up to date. But right now, without much further ado, let's dig into QuickBooks Online. Okay. All right, so here we are with Craig's Design and Landscaping Service, our simple company. And last time, I just want to go over very quickly. We talk about the first step. So first we're going to look at the chart of accounts. We're going to verify if we have any duplicated accounts. We went over on how to make them inactive, right? And how to clear them before you make them inactive, by the way. There are times when it says that you cannot do it because either is connected to a product or service, or is connected to a journal entry or transaction. So you want to find what those products and services are and disconnect it, and then you'll be able to delete. Sometimes it's a little bit more challenging. You have to dig in to find out exactly what's going on. Right? Maybe the categorization of the account is not matching. So those are things that you can find as a challenge, as bumps on your way to clean up your chart of accounts. But the procedure is you gotta just research where or what kind of error you are receiving, and then go from there. And rules, we talk about categorizing and rules. Make sure you organize your rules and eliminate anything that is bogus, and just keep it clean, and don't set up rules for checks. Don't set up rules for things that could be different categorizations. We also talk about reconciliation of credit card accounts and bank accounts. We talk how to correct a few things and how to reconcile. Now we do have more videos on that with more detail on reconciliation, and that is a big one, right? Make sure that if the bullet is on the top, the check mark is not check on the very top, means that there are transactions when you're reconciling, by the way. There are transactions that needs to be cleared before you can reconcile, because a reconciliation is not a reconciliation if you have transactions that needs to be cleared for the current period. Now if that transaction clear on the next month, that's okay. So, and it should have a green flag next to it, and if you click on it, it's going to tell you, okay, clear on the following month. So that's okay, not to be checked, because you need that transaction for the following month. But if it has no flag, it may be a duplication, it may be recorded there when it should have been recorded on a cash account. So you want to make sure you correct that before you finalize. So those are, okay, a little bit of review in the last week. Now we're gonna talk about how to enter cash transactions. So a lot of you may use a credit card that is not connected, or a bank account that is not connected with your business to purchase things for the business. And some of you may have cash transactions that you deal with cash. So your customers pay with cash. You may pay tips with cash. You may pay expenses with cash. You may even pay employees in cash. So how do you manage those transactions, right? So first of all, for those of you who use petty cash or cash on hand, means that you have, we're gonna go we're gonna go into the chart of accounts. Okay, yeah, there we go. All right, for those of you who use a cash account, so you want to make sure you do have it here. So you have your checking account, saving, and we can create a, by the way, it's a bank account. We can put under checking, and we can call it cash on hand, or you can rename it petty cash, whatever you want. Okay, so oh, I'm sorry, so cash on hand, and then I do need to name this account, and I can call it petty cash, or I can call cash on hand, whatever you know, cash on hand is fine. Okay, all right, so we created that account, and it's gonna be okay, let me add it here. It's a bank account. It's not under as just bank account. Sorry, that was because if I put it under checking, it's going to be a sub account of checking, and I do not want that. See how sometimes even somebody who's been using this for 20 years can make a mistake if you're not paying attention? Yeah. So you don't want this to be a sub account of checking or anything. It has to be an independent account, because we don't want that to mix up. All right, so how do you record transactions? If you're recording an expense out of the cash account, because you do have money in the cash right now. Let's suppose you receive sales. If it's square sales, it's going to be going to undeposited funds, okay? And then you got to record the deposit into the cash account. So let's say that these are cash transactions, and I'm going to change the account to cash on hand. This is money in. This is deposit, right? So I'm gonna say October 9th. So if it's square, it's gonna say square here, and you want to make sure that it's the cash accounts, the cash transactions that you have recorded previously. So we're gonna save and close, and I recorded money into my cash account now. See, if you can click on View Register, you'll see that deposit. It's split because it's more than one deposit. If you click on it and click on Edit, it's going to open up that deposit. It's going to show those two deposits and the total deposit into the cash account. All right, so now it's time to record my expenses. So I'm going to do the plus new. I'm going to record an expense, and I'm going to say that I'm paying, let's say I'm paying tips to my employees. So I'm going to, let's see, Joe. Okay, actually, John Melton. Oh, it's not a customer. John Johnson. There you go. John Johnson. I like how creative that is. But it's there. So we'll use that. Okay, we're going to change this to cash on hand. And I'm going to say what I'm paying. Let's suppose that I'm paying tips. Oh, I don't have tips on hand. So let's say I'm just paying a contractor. Maybe it's a contractor. I'm not paying or subcontractor. Okay, this is a sample account, so I may have to, nope, I actually don't have it. So let's see, we're gonna have to create one. And yeah, we don't have it. All right. So this guy is a subcontractor. So he has his own firm and he does some service for the company, but he's not an employee, okay? So that's very important. He's not an employee. He has his own company. He's paying his own taxes. You're paying as a subcontractor. There's certain guidelines for the IRA, so I am not trying to give you an advice on how to pay your employees. This is just how to enter a contractor expense out of the cash account. Okay, so contact your CPA in regards to the requirement if you should record as an employee or a contractor. All right, so first of all, we are going to create an account, and it is a cost of goods sold, cost of labor, and there it is, save and close. All right, or I can call this contractor, right? I can modify that and call it contractor or cost of labor. So I am going to say that I pay him $200 and I'm going to save and close. And it was out of the cash on hand. And let's suppose that I went to the store very quickly and I bought some supply from let's see, Home Depot. I don't want to advertise for anybody, but you know. Okay, so this is a landscaping company, so I'm sure they pay visit to Home Depot or Ace or whatever, Lowe's or whatever construction company. All right, so I'm gonna say here that I bought some supplies there and I spend, let's say, $200 on supplies. That's not related to any customer, so I just bought general supply. But if it is if you're purchasing something on behalf of a customer, you can put the customer here, or if you're tracking your expenses by customer, yeah, you can do that as well. So just make sure you put your customer. But if not, this is just general supply. So this is good enough. I'm gonna save and close here. So this is how I recorded the expense. Now, if you receive cash into cash on hand, okay, and then you deposit into the bank account, make sure that those transactions are not recorded as income because the sales is already recorded, especially if you have Square transactions. When Square transactions go to undeposited funds, you record it into the cash account. those transactions are the sales information. You don't have to enter again. If you do, what you're doing is that duplicating your income and increasing your tax liability. So, two no-nos. You're not gonna know your real income, and you're duplicating your income. Okay, so let's suppose that this is actually a deposit in the bank. I'm just ignore, I pick up the cash from petty cash and I deposit in the bank, but I already recorded those sales. So here, I am not recording this as a sale. Like I said, I'm going to record as a transfer, and I'm going to say that this money is coming out of the cash on hand bank account. That's important to know that the cash on hand is manually managed. So any transaction that has to do with cash transactions, you have to manually enter them, or you have to record. If you're recording it in from the bank because you deposit in the bank, you have to manually record. You got to record that this money actually came from cash on hand. So yeah, I'm not duplicating the sales, because I'm just saying that I'm taking money from one bucket and putting that money into another bucket. Okay, very important for that. Okay, now what if you have transactions that you purchase with a different credit card? You can manage from cash on hand, but if you want to manage it separately, there is one way you can do it. You can create another account, bank account, so you can manage that and call clearance account. On the clearance account, it's going to work the same way as the cash account. If you want to keep those transactions separately from cash, because you're managing only your cash transactions on your cash bank. All right, so let's show you how to add an expense if you want to record it to the cash on hand account. Okay, so it is the same way. So you're gonna just select the payee. Let's say books by Betsy. I want to make sure I put cash on hand, or if it is a different account, like I said, you would create that account. You can create right here as cash on hand as well. And then here I'm just gonna name, well, like I said, clearance from personal credit card. All right, or personal funds, whatever you want to call it. So here I'm gonna record any kind of expense. Let's suppose that I put some fuel on the car, and this car belongs to the company. Make sure that there's a differentiation here, because you only enter the fuel expenses and the car expenses if you're not using mileage. So it's either mileage or car expense, either or. Okay, but anyhow, I'm just putting here that I put it on my credit card. This is a business car. It is I have an asset in the account for this. So very important, very, very important to categorize it as such. Because if you're doing mileage, if you're using mileage at the end of the year, this would be an owner's distribution, because for like I said, for automobiles that does not belong to the company, but you're deducting the mileage, you're just going to deduct the mileage, and fuel would be owner's distribution. Okay, or any kind of expense related to the car. Okay, so save and close. But once again, I am not giving you any tax advice on that, or I'm not telling you how you should categorize something. Please consult your CPA for any tax advice on that and how you should do it. All right, okay. So this is how you do it. Now, remember that when I am entering those expenses on that clearance account will end up as a negative asset. And I don't want that. So I want to clear at the end of the year. So how do I do that? So let's go to chart of accounts. Oh, by the way, this is a different interface. Sometimes you may see it under accounting right below my accountant, and then you go to the chart of accounts, or sometimes you may click on the gear menu and click on all lists and chart of accounts. So there's different ways to get there. But anyhow, you're here and you see there's a negative 60 here. At the end of the year, I want this as a zero balance. So how do I clear that? I create a journal entry, or I create a transfer. Journal entry is a little bit more detailed. I want to put whatever date that this transaction was created. You can change it. You know, if you're just going to clear this account at the end of the year, you can do it as December 31st. That's fine. And this is if you create those expenses throughout the year and you're just clearing the account at the end of the year. Okay, so I'm going to select the clearance account, and now it's negative. It's a negative asset, and in order to increase my assets so that I can bring back to zero, I'm going to debit it, because debiting will increase an asset. And then I'm going to credit this to owner's investment, because I'm paying from my own funds. Contribution. Okay, this is a simple account. We don't always have all the items that we need. So we go to the equity account, verify what's in here. Nope, we don't have it. So we create a new, and it's not a bank account. Very important to create the right kind of account, guys. And what I'm going to create is an equity account, which is called owner's contribution, okay, or we can call partner contribution, owner's equity. And this account's going to go on the balance sheet, not on the profit and loss. So that's why it's important to create this as an equity account, so it's not going to mess up your profit and loss. Okay, so I can use partner contribution, not distribution, contribution, and that's good. And like I said, I'm going to credit that, because I'm saying that I'm putting my personal funds into the business. Okay, so I am going to save and close, and when we are back here, yay, my clearance account is zero out. So that's what I want on the balance sheet. Zero balance on the clearance account, because that needs to go somewhere, right? It needs to go to the right place. Okay, now how to enter any assets or liability into, so that's it for cash transactions. Okay, this is how you deal with cash transactions. Now the next step is to enter all your assets and your liability. Let's suppose you purchase a truck. Now, if the truck belongs to the company, you bought it and you acquire a liability for that vehicle, you want to enter that in the books as an asset, and if you have a liability, you want to enter the liability as well. So how do I do that? Is what we're going to do right now. So you want to make sure you enter that, and when you categorize those transactions, like the liability payments, like the payment to your vehicle loan or to your mortgage, you want to make sure you break down between the payment to the principal and the payment to interest. And if it is a mortgage, there is also escrow that you need to record the payment to. So you want to make sure that you categorize it correctly when you see it in banking, not just put it towards the principal, because an asset will not be a deduction to your business. It's just the depreciation on the asset, which is the expense. Okay, but the interest rate is an expense on the current year that you acquire it, right? So it's the escrow. So it's very important to divide it out. So you actually have to look into your statements and make sure you categorize those transactions correctly. But to enter the asset, we're going to do a journal entry here, okay? And we're going to put whatever date that you purchased that asset, okay? And we're going to, obviously, being an asset, you're going to debit it, and you want to make sure that you choose the right kind of asset. And if it's not here, because, okay, let's suppose you don't have that equipment in here. So I am just going to enter a new one because it's a new asset. So I'm going to enter it here. It's not a bank account. Make sure you enter it as a fixed asset. And let's suppose that I purchase I purchase a vehicle. There you go. Okay, I'm entering. You can put the original cost here. I don't like to do it because I'm entering that in the journal, okay? Because I'm making a journal entry. So I'm just not gonna put any here. I can put, instead of vehicle here, I can I can put what name of the vehicle that is. And by the way, if you want to make it a sub account of vehicle instead of just fixed assets, you can do that. Okay, so you would just select I'm sorry, here you would just select fixed asset vehicle, and then you can make a sub account here. If you're creating it from the chart of accounts, it's a little bit different. So I'm gonna say that is the Chevy 500, whatever you name it. You name your vehicle. Now I'm not gonna enter any value here, but I'm gonna debit it right now. Let's suppose I pay 25,000. Okay, and let's suppose that I paid out of this. I'm gonna duplicate this, and I'm going to take a look at some. Oh, I love to duplicate my page, by the way. So what you do is just you right click on the tab and then click on duplicate. This way I have two pages I can toggle back and forth. I want to find out some information on my bank transactions. Let's suppose that this is actually a down payment on the truck, okay, on that truck, car, whatever. So I am going to select that this I'm going to credit some of this value out of the checking account, because let's suppose I put a deposit or a down payment of 1,200, and let me make sure that the date here is right. So here is as November 4th, so I'm gonna put as November 4th here. So it has to be whatever date it actually happened. Very important, so you can match it in banking. And then finally, here I have a liability that I'm gonna create. Okay, so it's not a bank account. I have a client that created bank accounts for everything, and it was a big mess to clean up after, but not understanding the concept of a bank account versus an asset or an expense or equity account. So anyhow, enough of that. So it's a long-term liability because we'll pay in more than a year, and I'm gonna call it Chevy 500 truck loan. Okay, so this way I'm going to differentiate between the asset and the liability. So this is going to create a liability. When I'm crediting a liability, increases the liability. When I debit the liability, it decreases. An asset, debit, increase, credit, decrease. Okay. All right, so I create that. I'm going to save and close. And then you can create the accounts for that depreciation expense, as well as amortization for the truck as well. Okay. All right, so we entered those assets. And if you need to enter an amortization, I'm going to create an account from the chart of accounts to show you how different it is. Okay, so the type of account is up on the top, and you're gonna select the type of account. So the depreciation, accumulated depreciation, is a counter asset account. So I'm gonna select asset. Okay, and fixed asset, and the type of account. So it's fixed asset. The type of account, I will put it as accumulated depreciation. If it is a something that is not physical asset, then you would create an amortization, right? Or okay, so that's a depreciation account, and you can make it a sub account. Instead of calling fixed asset, I can make it a sub account of the Chevy 500. So when I do the accumulated depreciation, okay, accumulated depreciation. Okay, and I'm gonna call, when I create that accumulated depreciation, is gonna deduct straight from that Chevy 500, and I can put here Chevy 500 accumulated. I can abbreviate depreciation. Okay, and save it. Okay, and then at the end of the year, I'm going to write down the depreciation for the year according to what your accountant, your CPA is depreciating. Once again, go contact your CPA in regards to that. He's going to tell you how you're going to depreciate. I'm not going to tell you how you're going to depreciate this, because it has several things to take into consideration. All right, so now how do I create that depreciation? I do a journal entry, okay, and I like to put it for the end of the year to record the depreciation expense. And I'm going to debit a depreciation expense, okay. Keep in mind, I'm going to expense the depreciation. So let's say that I'm depreciating over 10 years. So 2,500 is the depreciation expense for the year, and I'm going to credit the accumulated depreciation, because this is a counter asset account. So I'm going to debit, means that I'm going to record the expense for the depreciation, and I'm going to credit the asset to take away from the value of that asset, because it's going to be depreciated up to the point where that asset will have a zero amount in the book. So we are going to save and close, and then when you look into the balance sheet, you're going to see that asset and how it depreciates. Okay, so now I have to change the date, because I recorded that depreciation to December, so it's not going to show here. And this is a cash account, or I can just leave it under accrual if it's accrual. And now, okay, let's take a look at that journal entry. Oh, by the way, if you want to see something you did just before this, you can click on the counter clock, and it's going to open it. Oh, there it is. So you see the asset entered and the depreciation. Now that the truck value on your books is 22,500, because we depreciated whatever needed to depreciate it for the year. All right, so this is how you enter your assets and liabilities, and then you do have to reconcile that. So how do you reconcile those accounts? Same thing as anything else. Now you want to make sure that you reconcile according to your statements, to your liability statements, or to your asset statements, right? So you're going to record all the liabilities, the payments, like recorded according to what was principal and what was not principal. I can just give a quick example here. So let's go into our sample account. Let's say that one of the expenses here was a payment to the liability. Okay, so let's say that this is, let's see what. It's not here. So we're just gonna add new, and I'm gonna call it ABC Bank. Okay, it's the one that gave me the loan for the truck, and I'm gonna record here that this is a payment to the but remember, you're gonna do a split transaction because this is more than just one. So what we do here is just click on split, and it's not cash on hand. By the way, the first one is gonna be the loan, Chevy truck loan. You want to find the right liability, by the way. If there is any customer related, you're gonna choose, but if not, that's okay. So you're gonna say that $500 you're paying on the principal, and then the remaining is interest expense. Oh, and I don't have interest expense, so I'm gonna create here. Remember, it's an expense account, so you gotta select. When you create those accounts, you want to make sure you create them correctly. If not, you're gonna make a big mess. And this is going to be interest paid. There you go. And save and close. And I'm saying that $300 is for interest paid. Now, let's suppose that this is a mortgage payment. If it is a mortgage payment, you're gonna select. Let's suppose that $300 is for the principal, and then let's suppose that $200 is for interest, and the rest is for property tax and insurance, right? I'm gonna put insurance here, but suppose if it is both, you want to reflect both. You can divide as many times. So this is how you split a transaction, but I don't have this here because this is a truck, so it's just gonna be the 500 here and the 300 here. Okay, apply and accept. And now if I want to reconcile that liability account, I am going into my chart of accounts. Okay, this interface is different. Like I said, there's different ways to get there. You can use your gear menu and get here as well. So I am going to click on reconcile. So if you go into the liability itself, I'm going to put truck loan, view register. You can reconcile from here. See the payment that I recorded? It's only going to show the payment that went to the principal, not the $300 interest expense, because that goes into your profit and loss because it's an expense. This is not an expense. This is paying on a liability. So we're going to reconcile, and I'm looking into my bank statement, and I'm seeing that the balance now is 23,300. Yeah. Okay. 23,300 as of, and I'll put November 30th. There you go. 'Cause that's okay. So if I select both transactions, I want to select both because that's when I enter the transaction, and that's the payment, the first payment, and voila, I have a zero difference. That's what I want to have. If you have a difference, it's because something is miscategorized here. Maybe you added all the payment into just the liability, and you can click on the transaction and add it, and you can change it right here. You can split right here as well. Okay, so just a quick tip, and we can finish it now. So you're reconciling, and you're gonna reconcile all your liabilities just like that, and all your assets just like that. And your assets, you just want to make sure you know how much is your asset worth after all the depreciation, right? But when you reconcile your liabilities, your mortgage, your car payments, you want to make sure that everything is categorized correctly. All right. Okay. So the next thing is to verify your profit and loss and balance sheet, but we're going to have to cover that next week. We're going to have a part 3, and we're going to cover how to look into your profit and loss and your balance sheet and verify what's miscategorized and how to correct that. Okay, right from the balance sheet, right from the profit and loss. All right, I will go back here. Okay. Okay, I hope this was useful as you're preparing your books for the end of the year. This is crucial information because most likely you're going to have to do one of those things or everything, right? If you already know the other steps, you may take 1 or 2 tips. If you don't know, this is a breakdown of everything you need to do, everything you need to check. All right. So I am looking forward to see you next week. Hope this is useful. If it is useful to you, make sure you subscribe to our channel. We're going to be back with more information next week, part 3 of how to clean up your books if you are a business owner. And then we're going to bring more information and more tips on how to help you bring your finances up to date, helping you understand your business so you can take it to the next level. I am so excited when I hear from you. So make sure you put down your notes below what you want to hear next time, what you want us to cover. And if you have any questions, please write down below. I'll make sure that I cover that. And I look forward to see you next week. And until next week, keep on smiling.